Perception is strong and sight is weak. In strategy, it is important to see distant things as if they were close and to take a distanced view of close things. Miyamoto Musashi. My friends, each and every day we apply the strategies like Miyamoto Musashi of understanding that perception is strong and sight is weak. And what we do is take a distanced view of things as if they were close and take a distanced view of close things. The reason we do that and how we do that is through using all three of our time frames, both the half day, the 2-day, and the weekly. And we look at what we see going on our short-term chart, and we compare the long-term chart to that and what's going on with the bigger trend and how the smaller trend, the medium-sized 2-day trend, how those are affecting each other, and the weekly chart, which is the big chart that we trade off of. We use exactly these same ideas as to see what is really going on, to perceive what is happening, not to get pulled into something that's not happening. And that is why, again, I've said over and over, as we see this market continually trying to top and then moving on further, like today, up 1.04% for the S&P 500. We had 2 weeks of sliding sideways and some down movement, but again, not confirmed. How is it not confirmed? Well, we didn't have a red spinning top. We had lots of volume last week, but still all the indecision of a doji. And how did things start today? With a green up candle. We can see on the 2-day chart as we look at the Friday, Monday, we have another spinning top sitting right there above the weekly trend line. We can see where on Friday afternoon, as we had an up movement with that green spinning top, and then things popping up Monday in the morning and in the afternoon. So again, the market still has not exhausted itself. It is still long. We are still long on it, and it's still trying its best to keep going up. What's the catalyst that will end this? I don't know. We just keep printing money backed by nothing, and real stuff inflates in value. But at some point, it will all come tumbling down, and we will be here to watch it. But in the meantime, we're going to ride the gravy train because that's all you can do. Now, remember, we're not a stock calling service. We're an education firm. We're not a Bitcoin, gold, or bond calling service, but we do track these charts with you each and every day. Want you to practice trade with us. Learn by doing. If you don't have our book, only way to get it, become a Patreon supporter. You will get it in the first email along with the 3-part series, Options Made Simple, the Charting Wealth Way. That is where we are on the S&P as the market shows some more legs. Look at the NASDAQ 100. It is up 1.26%. Look at it, a busting up in the morning and afternoon. Again, similar to the S&P, it's sitting just above the weekly trend line on the 2-day chart, and it's punching up. Now, we look back to the high that we had back on the week beginning the 6th of October. That was 613.18 last week, 608 this week, 612.80. So it's getting close. And again, has some more legs on it. For those of you who are subscribers, of course, please make sure to check out the trade execution summary grid, which has already been emailed to you and also uploaded to the Patreon page. Remember, everything we send by email, we also upload at Patreon. So if you're traveling or for some reason you don't get the email, it's there. And it is there for you today and gives you the directional probability, which is decent on the S&P and the NASDAQ, as is the back test accuracy, which we provide to you each and every day. Let's move on to 20-year U.S. government bonds. They are up 0.38%. Now, last week, the high was 91.50. This week, 91.56 goes. So it is going a little higher. You can see where things sort of shaved off that exuberance on Thursday afternoon on Friday and then popped up on Monday, going just a little bit higher, continuing to move, which is good to see. We're a little bit better than a coin toss when it comes to the 20-year U.S. government bonds as far as the directional probability. Backtest accuracy is about the same. So we are long on 20-year U.S. government bonds too. Now, again, this is just incredible. Gold just a hammering up again. Now, it pulled back some for us on Friday, but man, did it shoot off up 3.64%. God, gold just keeps on killing it. And the backtest accuracy is okay on it, as is the directional probability. We are still long on gold. Is just beautiful. Now, Bitcoin recovering on Monday, up 4.08% after days of down movement. We can look here on the 2-day chart and you can see where Bitcoin had its last interim high back on October the 3rd. Well, let's see that. Yeah, that's Friday. You can see the October the 6th where it punched up even strong. Well, that's a Friday, Monday. And of course, that was on Monday where it punched up to its high. On our charts, and again, this is the Bitcoin ETF, a high of 35.76, and for the last past week going down hard, and of course starting Monday off, probably recovering some of that from over the weekend and popping up. But again, we can see the downtrend here. Our math, when we run it through our charts, we still have a bias in the down direction. We will keep a close eye on Bitcoin after this big pump up on Monday to see just where things are going to go. A lot of weight pushing it down. But again, Bitcoin can take off sometimes and go through a tear. So we shall pay attention and see if it has any legs. But it's still decently below the weekly trend line on the 2-day, half-day, and the weekly chart. That is where we are, my friends, as we start the day, start the week with the first day and everything up. Everything up. That is where we are. God bless. All the best from the whole team at Charting Wealth.